Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, October 27th, 2019, and we again find ourselves in the final trading hour of the day. As I mention each day, I believe the final hour of trading, and more specifically, as close as you can get to the close of the market, are the most valid prices. During the day, you have the day traders, you have the algorithms battling it out. In my opinion, it's a lot of noise. At the end of the day, you have the large financial institutions, you have the market makers coming in with size and moving the price to what, in my opinion, the most valid price to make your buying and selling decisions from. And so that's why I am primarily an end of the day trader, wait for the closing price to make my buying and selling decisions. So anyway, we are having a decent day today. The Dow is up 70 points, the NASDAQ is up 39 points, and the S&P is up 12 points. So yeah, we're having a pretty good day all and all. So appreciate everybody coming today. I really do appreciate you spending your time here, investing your time with me. I hope you're getting some kind of return on your time investment by this channel helping you with your trading and how you view trading and your investing. So I really do appreciate everybody coming by today. So if you guys can hear me, if you wouldn't mind just saying hi in the chat, and just so I make sure we're all connected and everything's working well. And then we will get on to business. Hey, Mount Doji, what's going on, my friends? Nice to see you as always, sir. Thank you for coming by. So, all right. So it looks like everything is good on the connection side. And so the plan for today, everybody, is as always, first of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to come back. We're going to talk about my current positions, when I bought them, why I bought them, and how I'm going to manage them moving forward. After that, we're going to go through a few minutes on trader psychology. I like to talk about trader psychology every day because at the end of the day, the biggest skill that you need to learn to master is managing your emotions, which is trading psychology, right? So you need to learn the technicals. You need to learn when to get in and when to get out. You need to learn that in order to formulate a plan, but your plan's no good without the discipline, the mental discipline to manage your emotions. So I do like to talk about that each day a little bit, just hoping that you guys, by hearing it every day, will start internalizing it and realizing it is a skill that you have to master. So after that, we're going to go through all my current, my watch list. We're going to look at all my stocks. The way I view technical analysis is that each indicator like MACD or RSI or moving averages, I look at those as potential groups of buyers. And if you want a stock to go up, the best thing that you can do is to be with as many other buyers as possible. And when you get a confluence or when you get a combination of moving averages, in my opinion, that's when you see different groups of buyers coming in. And the more buyers, the better. And that's why I like to look for a confluence of technical indicators coming in at the same time. So that's what we're going to do. We're going to go through each stock. We're going to look for those indicators. We're going to look for those confluence of signals. And if something looks good, I'll mark it. And if we have 3, 4, 5 at the end of the day to look at, I'm going to go through them with more of a fine-tooth comb at the end. And if there's something good, we will buy it. Or I will buy it, and then we'll start managing it starting tomorrow. So, and then after that, if anybody has any questions about anything that I discussed today, if you need any clarification, please let me know. Happy to explain it. If you'd like me to take a look at any stock symbols, happy to do that. Or if you just have any other questions about trading, please ask. Don't be shy, and I will do my best to answer. And if you have any symbols that you think would be a benefit to the group today and you would like me to look at and give you my opinion on, I'm happy to do that as well. Maybe put them in the chat there, maybe put a little star by them or something so I know they're more time sensitive. So that is the plan for today. So if you guys could hang on for a sec, about 40 seconds, I will be back and we'll get started. So hang tight for this disclaimer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Mount Dochi says, how about COR, LOL? Uh-oh. Let's see. COR, I think, is what we looked at yesterday, right? Holy smokes. Nice trade. You took that, right, Mount Doji? Yeah, I mean, if you remember, Mount Doji, I really liked this yesterday. I was trying to remember what this was earlier to see how it did, but this was... this was one heck of a setup. I mean, we had this beautiful V1 entry. We also, washed out this prior low. So this was a false breakout to the downside. Bullish engulfing bar. Closed above all the moving averages. This was a great trade. This was a great trade. I think if you remember, Mount Doji, I said if I would have seen this, if you would have mentioned it earlier yesterday, if I would have seen this, I would have bought this, no doubt about it. So yeah, what a wonderful trade. But I think, Mount Doji, yeah, you did have it. Sweet. Hey, John Cortez, how you doing? Nice to see you, and thank you for coming by today. If you have any questions, John, you just please let me know. And we have our other John. We have our next John. Hey, John, pot stocks on a bounce, CGC. This is one of those symbols, John, where I can't look at it. I can look at my other chart here, and let's take a look over here and see what that one looks like. Sorry, by the end of this week, supposedly I'm gonna have all my charts back. Yeah, bounced 4% today, didn't it? CGC is 37.95 RSI. It did find some resistance there at the 10-day and the -1 ATR channel, and it gapped up. But yeah, boy, it's been a while. It's been a while since the stocks have bounced. The pot stocks have bounced anyway. Kurt, hey buddy, what's going on? Kurt says, hey Greg, proud Gossett grad here. Yes, Kurt had his last lesson last night and aced it. Basically aced what we did last night. Yeah, you were really good, Kurt. And thank you for being my student. I really hope it helped. From what you said, it did, but it was great working with you. JT, hey buddy, what's going on? Good to see you, sir. Thank you for coming as always. Mount Doji, I took this one yesterday, COR. Yep. Yeah, that one was awesome, man. I mean, that's the epitome of a perfect setup. Bullish engulfing bar, V1 entry, false breakouts at the downside, rejection of the -1 ATR channel, closed over 50, closed over the moving averages. I mean, if you don't take this trade, I really don't know what trade you would take. Congratulations, Mount Doji. That's freaking awesome. How are you going to manage this going forward? First challenge is to get in a trade, right? Second challenge is how you're going to manage it. And by the way, guys, when Kurt and I last night did our last lesson, we did, simulation. We went through the entire year of 2015 on the Apple. We went day by day, right? I mean, we did this. Okay, what are you going to do now, Kurt? What are you going to do now, right? Now, you're going to stay in, you're going to get out, you're going to take profits. What are you going to do? And we went through the entire year of 2015. And if you guys remember, 2015 was not a good year for the stock market. So we had some good setups. We had some really valid setups. They might go our way for a couple of days and then they went against us. But, if I would have picked any other year, 2016 or 17 or 18, it would have seemed very simple. The setups would have worked out really well. But I just went back randomly, just random, and stopped and started, and it happened to be 2015. And, it's a good reminder that even though you have good setups, does not always mean they're going to be successful. And, through 2015, were we profitable on the setups for 2015? No, I don't think so. I think all in all, we were probably net losers. But, the key is we were, it was a small loss with proper position sizing because we had wins as well. But, there are some years where it's going to be tough to make money, and, the focus should just be on capital preservation. So, Kurt, I thought it was a good exercise for me too, to keep in mind, because we've been so used to these up markets, right? That, just around the corner may be some kind of sidewards market or downward market for a long time. So it was a good reminder, and it was a good exercise, and you did really well. Kurt says, thank you. Best decision I could have made. Thank you, sir. I appreciate that. You're such a great student, really. I mean, my last 3 students have been just the best. Kurt, Jesse, and Anthony, you guys have all done really well. Hey, MJ, what's going on? Hey, Greg, sorry, been quiet moving, but I'm almost ready. Fantastic. Yeah, I'm looking forward to our lessons. That's Jackson from Australia. I am ready. You just let me know when you are. Hey, Jesse, good to see you, sir. Hey, Greg, congrats to all of the distinguished graduates of Gossett University Class of 2019. That's great. Thanks, Jesse. Yeah, you guys were the best. I mean, you guys took it so seriously, and really, I could tell you wanted to learn. And you rewatched the videos after we did the one-on-ones. You watched them over and over to really take it all in. So that's awesome. Steve Burns, hey buddy, good to see you, sir. Steve says, great to see you sharing your knowledge with these great guys. Thank you, Steve. I appreciate it. The majority of the knowledge, Steve, that I'm sharing with these guys, you shared with me. So, thank you. Thank you for doing what you do, and for, your books and your courses and your mentoring and your information that you have on Twitter and your website. I mean, you've helped a lot of people, Steve. You've done some good things, my friend, and thank you for coming today. It's always great to see you, and seriously, I'm always pumped when Steve's here. So, all right, well, let's take a look real quick. Let's get started here. All right. Oh, give me 1 second. Let me have to cancel some orders here. 1 sec. All right. There's one, and let me cancel this other guy over here. 26. Okay. Okie doke. Now we can get back to it. Sorry, got me off my game here. Okay. Guys, sorry. I'm having an issue over here. Okay. Gosh dang it. Okay. Dang it. Okay. I'm good. All right. So IWM. I did buy IWM back here on the 15th of October. I bought it because we had this close above the 200-day moving average. The close above the 200-day moving average is not always such a great back-tested approach. But at the same day that we had this close over the 200, we also had the MACD crossover. Remember how I like to look for, multiple signals. So on that day, I did go ahead and buy it there at 51.39. If I was wrong, I'd be wrong. Very small with the close back under the 200, but fortunately went our way today. And so I have hit one profit target already here today at 152.53 and pretty close to hitting this second profit up here at 153.60. So, as my private clients will know, I bought it here. Now it has moved approximately 1 ATR away from my entry. So this is not a mechanical trade. This is a discretionary trade. So now that it has moved 1 ATR away from my entry, now I will start to implement some type of trailing stop. And the trailing stop would be a close below the previous day's low or a rejection, possibly a 70 RSI rejection if it keeps on moving. That would be way up in this area. I'd have to see how it would react around the previous high here. Conversely, if we move up and then we close down below any previous day's low, that would also be a signal for me to go ahead and lock in my profits. So anyway, really close to that second profit target. Always like to hit those profit targets. So we'll see whether or not it gets there today. But tomorrow, if we close below the previous day's low, we'd also be closing below the 200 day. So anyway, nice trade today. Okay, MasterCard. So I did take MasterCard back here on the 14th of October. I bought it when we had the 1050 EMA cross. This is a good back-tested approach to trading MasterCard. I'm using the 1050 crossover as my entry signal. It doesn't mean that I'm going to just stay in this forever until the 10 crosses back below the 50 EMA, but that was my entry signal. The entry price when that signal happened was right here, was still in the value zone, which I like. About the maximum I'm going to buy with any kind of signal is like 1.5 to 2 ATRs. So I did buy it here. Next day we had a nice day, hit a profit target. Yesterday, no profit target. We did hit one profit target today, which I'm glad, because as you can see, that was very near the high and it has reversed. So, as with the previous stock that I just talked about, which was IWM, I bought it here. It has not moved 1 ATR away from my entry yet. So I'm still going to continue to hold this for as long as the 10 is above the 50. If it moves up one more day and gets me above 1 ATR distance from my entry, then I will start instituting again some kind of trailing stop, whether that's a close below the previous day's low, some kind of big reversal bar, if it rejects the 70 RSI to the upside, if I see red flags. But currently, because we have not moved 1 ATR away from the entry, I'm going to continue just to hold this and we'll see what happens. But this is not great price action today. For those who can see V1s, V2s, whether positive ones or negative ones, you can see this is a V1 to the downsides. This is day two washed out, days one high to the upside and reversed back down. So that's not particularly great, but it's not bad enough for me to go ahead and just take off this trade yet. So again, moving forward, as long as the 10 closes above the 50, I'm going to keep it. If it closes below, I'm going to get out. If it moves 1 ATR away from my entry, I'm going to start initiating a trailing stop on this trade. But again, it's down today, but very happy that I took a percentage of my profits up here when it was higher today. Okay, so in contrast to the last two trades, which were discretionary trades, this QQQ trade is a completely 100% mechanical trade. I did buy it back here on the 11th of October when the 5 crossed above the 20 EMA. This is a good long-term back-tested approach to trading the Qs. The entry point of the price when the crossover happened was still in the value zone, so it allowed me to take it. Next day didn't do much. We hit, I believe it was 2 profit targets on the Qs on this particular day, which was nice. So we took some chips off the table, so if it does go back down I have fewer shares and will help mitigate that loss, in addition to locking in some prices at a profitable level. Yesterday it was an inside bar. Today was up earlier. You can see I got very close to my profit target, but I didn't quite get there, unfortunately. So that's how it goes sometimes. Sometimes you just miss those profit targets by literally pennies. But that's how it goes. So anyway, there's no trailing stop on this. I will keep this as long as the 5 EMA crosses over the 20 EMA. If it continues to move up, I will continue to phase until I'm either out of shares or the 5 crosses back below the 20. So these are very easy trades. There's no discretion involved. And you might say, well, if they're easier, does it make them better? Not really, but what I'm trying to do is I'm trying to diversify my entries. Some of them are discretionary, some of them are mechanical. This might go up and have one bit bad down day that if it were discretionary, I would get out. And then it might just take off and go for 2 months and I would never be able to get back in the trade. So I like to vary up my approaches, some mechanical, some discretionary. I sell puts, I sell premium, and then also the overnight SPY trade. So we don't want to have too many of the same type of stocks in any one industry, right? You wouldn't want to hold 4 or 5 technology stocks because at some point they're all just the same. They're in the same industry. But I look at my trading approaches as the same too. I want some discretionary, some mechanical, some put selling, premium selling, and overnight trade. So I like to vary up my approaches as well. So anyway, this one's on autopilot, robot trade, phase out to the upside till I'm out of shares if it keeps moving, or getting out when the 5 EMA crosses back below the 20 EMA. And lastly, I just talked about it a second ago, is the SPY trade, the overnight SPY trade. And in case we have some new viewers today, I do want to do a few minutes on this and let people know why I take this trade every day. But I do buy the SPY every day at the close of the market, every day, regardless of technicals, and I sell it first thing the next morning. And you might say, but Greg, you do technical trading. Why would you do that? It's based upon a good long-term back-tested approach that has good results. This is from Liz Ann Saunders at Bespoke Invest on Twitter. But with this approach, you have 2 approaches. First approach is you can buy the SPY at the open each day and then sell it at the close each day. So buy at the open, sell at the close, buy at the open, sell at the close. If you would have done this since 1993, you'd have actually returned a negative 13.9% for your troubles. However, if you do the opposite, which is what I do, you buy the SPY at the close every day, you sell it the next morning at the open. So buy each day at the close, sell next day at the open. Do this every day. If you did this approach from 1993, you've actually returned 634.2%, meaning that all the performance in the SPY and the S&P 500 ETF tracking stock, SPY, those returns have come from people bidding it up in the aftermarket and bidding it up in the pre-market and selling it into the open. And you can see here, right? Here's the blue line. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. It's not even close. This has at least up to the beginning of January of 19, starting back at January 93. This has had a huge edge, right? And when you have an edge, you should take that edge, but in between, even though you have an edge, it might go down, might go against you. That's just normal randomization and distribution of wins and losses. But if you do have an edge in the long run, it will play out. So this does have an edge. In between, you have bumps and bruises, and so it's important to always position size correctly so that you don't get discouraged, you don't stop. Because imagine if you would have started right here, you'd have had almost 2 years down. You said this is the worst approach ever, and you probably would have given up right before it moved up and went up long term like it has. So always important to position size correctly. I take a maximum 10% position size of my total capital on any one trade, but I do like this chart to show you that even though you have an advantage, there's bumps in the road and they're to be expected. So with that being said, I did buy the SPY yesterday at the close at 298.40. And I sold it this morning. It gapped up here, sold it at 299.70. So that was nice. It was a $1.30 profit just overnight. And, I hear a lot of day traders saying, I don't want to hold overnight. It's too dangerous. But in fact, it's the opposite way around. Holding overnight statistically has been where the gains are based upon the chart I just showed you on the S&P 500. And you can also see that in the daytime, the prices do not move much. It's the overnight session. So I really do believe that holding overnight is in itself an edge in trading. So anyway, yeah, great trade on SPY. I will be buying this again today at the end of the day, right near the close. I already have it programmed in, so as soon as the market closes, it will buy at the close, and then I will sell it first thing tomorrow. So that is it. Just real quick recap. IWM, one profit target today. It has moved one ATR away. I'm gonna hold this until I reject the 70 or I close below the previous day's low. MasterCard took this with the 1050 EMA, hit a profit target the next day, hit one today, hasn't moved one ATR, so I'm going to keep this as long as, now that because it has not moved one ATR, I'm going to keep this until the 10 crosses back below the 50, or if it moves one ATR in our favor, then I will start to trail. Qs completely mechanical on the 520 EMA crossover. I've hit some profit targets on this already. No discretion on this trade because it's mechanical. Phase out to the upside or have the 5 cross back below the 20 for my exit. And then SPY, of course, just talked about that. And I will be buying SPY today at the end of the day and selling it first thing tomorrow morning. All right, so let's see. Jesse said, hey, Steve, caught your interview with Trading Justice. Excellent. Oh, you know what? Thank you for mentioning that, Jesse. I saw that on Twitter, and I'm planning on listening to that today on my walk after the market closes. So thank you for mentioning that and reminding me, because it slipped my mind till you just said it. So yes, I'm going to listen to that as well. So that is, Steve is being interviewed. He's a guest on Trading Justice, and I'll try to find that link and post it. Mount Doji says APPS was the only V2 that caught my eye today. Let's take a look real quick. Yeah, looks pretty good, guys. I mean, you know, it's a higher low V2, no gap. MACD is positive. We're at a 5171 RSI. You know, we do have the 50-day moving average above us. At least it's upward trending. But yeah, you know, it's a $6 stock. So for me, I'm probably not going to buy it. I don't like buying those low price stocks. From a technical standpoint, you know, if I got in today, if today does close above 2 days ago's close, so the close was 660, right now it's at 659. So right now, technically it has not triggered, it has to close above. But you know, here yesterday is the washout bar. I would use this, a close below halfway of this as my washout, and for my potential downside, and you know, potential upsides possibly up to here, maybe up to here to the third ATR channel, or you don't know. But the risk to reward makes sense, right? The risk to reward makes sense. But yeah, I like it. I like it. Looks good. Thanks for sharing that, Mount Doji. Jackson says, Greg, FYI, not sure if other students use TradingView, but I've written a script to do your fake out bars. In time, I'll do the ATRs. Oh, fantastic. Fantastic. Most of my students have been using TD Ameritrade, but yeah, that's, I mean, if you can have a script for anything time saving, that's fantastic. Hey, Murat, how you doing, bud? Good to see you. Murat's our friend from Norway. Excellent to see you, my friend. Murat always has good stuff for us, interesting trades. So thanks for coming, bud. All right. So anyway, this is the time of the podcast where I like to do a few minutes on trader psychology. I like to go through Twitter. There's you know, a handful of channels that do an excellent job of putting out good information about trading psychology every day because they know it's important. And so I like to go through those. I like to scour through those, and I like to look for something that's relevant for what's going on with the market, or I think would be helpful for you to hear. But this is from our friend Thomas Payne at Trader T Payne. Excellent Twitter channel, you guys. He puts out such good information I've highlighted his post here tons of times because he puts out such great information. But and so if you haven't subscribed to him on Twitter, please do, right? Please do read his stuff on trading psychology, his trading words of wisdom, and read them, internalize them, and make them part of you. But this, you guys always hear me talk about this, but the number one difficulty in trading is emotion, right? It's not the technicals. It's not knowing when to get in and when to get out. That stuff's pretty black and white at some point. But the difficulty is the emotion. And the number one cause of emotion in trading, big money on the line, right? As soon as you have a large position, all of a sudden it clouds your judgment, turns up the emotions. If you have more emotions, you're probably not going to follow your plan as well because the emotions are going to override that. Number one way to end this cause and effect, reduce position size. And I'm a huge advocate of reducing your position size. I literally, when I get into a trade, I really don't want to care about that trade. I really don't. If it loses, okay, that's unfortunate, but I don't want it to sting, right? Because I don't want to start destabilizing myself in any way, shape, or form. I just want to be right down the middle, have enough position size on so it makes a difference. But if it goes against me, it's not going to lose too much money, but more importantly, not going to start inching its way and getting its claws in you of trying to mess with your emotions. So no matter how good of a trader you are, no matter how bad of a trader you are, if all you do is position size, conservatively reduce your position size, it's going to make trading better. I'm telling you, it's going to keep you in the game. If you get into the market and you take a huge position size and you have something really go against you, you're done. Right? You're done. All of a sudden you hate trading, like, nobody can make money trading. And, those stories come from people that position size too long, hold on to their positions too long. They position size too large and they hold on to their positions too long. So, the one quick fix for anybody, no matter how poorly you're doing, no matter how bad of a trader you are, is reduce your position size, reduce your emotion. It will help you trade your plan correctly. It will help you get experience with trading, and with more experience, you're going to get more skill and you're going to become a better trader. So thank you, Thomas. I thought that was very apropos. As you guys know, I say this all the time, but I really mean it. Number one difficulty in trading, emotion. Number one cause of emotion, big money on the line. What's the way to end this cause and effect? Reduce position size. So it's probably some of the best advice I could give any trader. So thanks, Thomas. Hey, Max B, how you doing? Max says, this weekend I read one of best pieces on fear and greed I have seen. Highly recommend reading this article. Oh, that's great. Can't post link. Collaborative Fund Origins of Greed and Fear. Okay, everybody. If you Google Collaborative Fund Origins of Greed and Fear, you'll be able to pull up the article. Oh, thank you for that, Max. I will definitely look at that. I mean, fear and greed are the killers in trading, right? And trading is about emotions. So, anytime I can read something good about it and increase my knowledge, I like to. But thank you, Max. Steven says, position sizing is a volume dial on your emotions. I think many years ago, me and Greg would have both traded sizes that would shock you, that affect our ability to make good decisions. Yes. Yeah. Steve, you've told me about that. And I know from firsthand experience, I took the largest positions. It was ridiculous. The stock market would go down. I would laugh and buy more, buy more, buy more. Everyone was scared. I'm like, I don't know what you're scared about. It's just getting a better price. And that works a lot of the time until you get a stock that it doesn't work. And then you're really in trouble. Trust me. But yeah, I always like when Steve puts it that way. It's position sizing is a volume dial on your emotions. If your emotions are getting too high, you can't stand the heat in the kitchen, turn down that dial. Just turn down the position size. Everything will seem better and easier, I promise you. Murrah says, I am long in spot Brent oil. Sticking to the plan has worked out so far. I'm sending it to you, Greg. Okay, awesome. Thank you, Murrah. Steve Burr says, the pain of big losses can be very mentally and emotionally painful and may put you on tilt wanting to make it back. Yeah, revenge trading. I think that's the biggest thing. Number one is that when you lose, you want to make it back. And the way to do that quickly, yeah, double, quadruple up on size. But rarely works, folks. It's a bad way to go. It's a bad way to go. Just stick to the plan, nice and smooth. Frank, hello, Greg. Can't seem to get the video on my mobile. Been holding TMHC and IB for nice gain. I'm eyeing ALX for possible entry point. Okay, let's see. You know what? I'm gonna take a look at those, Frank. Well, let me see real quick. ALXN. Well, it was above the value zone. It's coming back in value. I would be looking for a higher low V1 or V2 here, but I like that it's moved up and come back down, so that's good. TMHC. Boy. Great trade. Beautiful. Beautiful, beautiful. Up 2.76 today. Very, very nice. It's a 70.87 RSI right now, Frank. So something to consider is, you know, today if it loses a 70 RSI, that's not such a great bullish signal. I mean, it's certainly bullish today, but, you know, a lot of times stocks will have issues at the 70 RSI. So if I were in this trade, I would be watching this. If it closed under the 70, I personally would get out. If it stays above, I would stay in. Okay, so IBP is one of those that I'm not getting today's data on. Let me put it over here. Whoa, huge day up. 3.84, fantastic. Congratulations on these great trades. 74.32 RSI, so it's holding above the 70. It's going parabolic. It's like way up here right now, right? So that's fantastic. But you know, just make sure that you don't give it all back and you have some kind of plan, Frank, to take advantage of these big moves up here. All right, don't give it all back, but congratulations. All right, well, let's go down through the list here and see what we're doing. Apple. Apple the last few days has just kind of been moving sideways. It has not really rallied with the rest of the market, although we did rally earlier than the market did, so I guess it's just taking a breather. It's just too high here for me. I mean, it's definitely, you know, it's definitely bullish. It ran into resistance right at the 70, just like I just told Frank. It did run into the resistance at 70. It might move sideways here and then have another leg up. But for me to get interested in Apple, I'd have to have it move back into the value zone between the 1 and the -1 ATR. Have some sideways movement. Look for a V1, V2. Maybe look for a cross under like a 520 crossover and then back over. So, or, you know, down here at the 100-day moving average, probably same time where the 30 RSI would be a really good place too. But most likely pull back into value, sideways move, V1, V2. Adobe, big couple days down today. Most likely on Adobe, I would be looking for, at this point, would be looking for a low dip buy, a deep dip buy, maybe into the 30 range, under 30 RSI back over, or perhaps a close under back over the 250, but nothing on this today. AMD has been very strong. It's above value. I don't like to buy above value. And when I mean above value, above the 1 ATR channel, I want to see it come back into value, look for some kind of signal like a V1 or V2 to get me back up in the trade. So essentially looking for a dip. Amazon having a really great day today. Looks like it's may close above the 200-day moving average. It is above the 200-day moving average right now by about 20 cents. Think I'm going to have to let this one pass just because how high it is. I mean, it's like 1/3 ATR. It's close to the second ATR. It doesn't mean it can't move up, right? And it does, you know, if you buy it right above the 200, it does still get you a good risk to reward. I bought it back here had two good days. I actually got out of it yesterday when it rejected the 50. I mean, obviously, I wish I would have held it, but that's how it goes. That was my plan. My plan was if it rejects the 50, I'm going to get out, and I did. But it was still a nice profit. But I'm, if I was in Amazon and it closed above the 200, I would keep it and then wait for a close under. But it's different to be in it and have profit over the 200 than to initiate a new position here today. I mean, from a backtesting standpoint, yes, buying over the 200 does work. But again, I don't like where it is in the channels near the second ATR, so I'm going to have to pass and not take another entry on Amazon today. Boeing, nothing on Boeing. Might be interested if we get below 200-day, back over, but nothing right now. Caterpillar a couple days ago did close above the 200-day, which is very strong, but it's so close to the third ATR. Remember, I don't like buying over the 1 ATR or the 1.5 ATR on a crossover, so I just can't buy it here. Doesn't mean it just can't go motoring up. Very often it does, but 90% of prices tend to fail near the third ATR channel. So I'm not going to buy something where percentage wise tells me that it's going to fail, but it might keep going up. So, but nothing on a Caterpillar. If I want to get back in Caterpillar, I would need it to come back down into the value zone. I don't want to buy above value. Dow Jones up slightly today. Nothing here on Dow Jones. Walt Disney, big day up here. Boy, I was looking for it to come back down here when it was this low. I wanted to buy, like under the 200 back over or 30 RSI. But at this point, it's moving on up away. So, if you don't catch the bottom, if you don't have a signal, then you kind of have to wait for a couple things to happen. In this, either a high or low V1, V2 in the value zone, or conversely, a 10-50 crossover is also a good back-tested momentum strategy for Disney. But nothing on Disney today. Etsy, nothing here on Etsy. It has the resistance of the 200 above it, but it's just too high in the channels for me to do anything with. Like a lot of stocks, I want to see a pullback. We bought it right here back on the 9th when we had this nice V2 and we had a couple really nice days up. So that was a good trade, but nothing on there. Ford Motor Company, as you can see, it's really having issues with that 200-day moving average above it, so nothing there. Facebook having another nice day. Steve, congratulations. Steve bought this back here on the 3rd of October, I believe, and he has rode it all the way up. So beautiful trade, my friend. Beautiful trade. So I imagine he's going to be staying in that today. I don't know. I don't want to speak for Steve. But anyway, fantastic trade, Steve. 5 below, above the value zone, looking for a pullback. Gold, gold miners ETF has moved up today. This makes this a false breakout to the downside and back up, but I don't like where it's at RSI wise. I'm not going to buy just an over on the 200, the 100-day moving average, not in this range, RSI range. So really nothing here. I'd look for it to move up a little bit, have a day or two down, and then look for a higher low V1 or V2. Gold, it is in the value zone, and it has stabilized. We were down, but now it's kind of stabilized. I'd be looking for a 520 crossover. That would be a good entry. Google, it's been doing well, but it's too high for me up here. I need a pullback. Goldman Sachs, Goldman Sachs had a really valid signal yesterday. It had a 520 EMA cross, and the price action was right in the value zone. I mean, totally good trade. If I didn't have MasterCard, I would have taken it for sure. But I already had MasterCard, and MasterCard is financial related. Goldman Sachs is financial related. Not exactly, but they are related. So I didn't want the extra correlation. So I decided to pass on this trade. If I didn't take it yesterday, could I take it today? I could. I'd get a 40% discount on it by waiting. And the 5 is still over the 20, but I think I'm going to stay with my plan of not having more than one financial stock at this moment. But yesterday, that was a completely valid trade. MACD is positive. That all looks good. IBB has moved up nicely since the 520 crossover. This is a valid crossover. I didn't take it, but it has moved nicely. So too high for me to buy today. Pull back into the value. V1, V2 would be excellent. Intel. Well, down today. You know, we were above value. We are returning to value. If we could maybe come down another day, stop going down, move sideways, look for a V1 or V2, that's where I would be interested in buying Intel. Man, look how close I came to that profit target. The high was 153.51, and my profit target, which is still in there right now, is at 153.60, so I missed it by 9 cents. So who knows, maybe if it rallies into the close, I'll get it. If not, then that's okay, but I did hit one today already. Johnson & Johnson, big strong day. Looks like it got stopped right at the third ATR channel. No big surprise to me. You guys know that. Looking for a pullback into the value zone. Coca-Cola, I almost took this trade yesterday on this V1, but if you remember, it closed like a penny or two under the trigger point for the V1, day 2 washes out day 1, and this did not close above day 1's close. Otherwise, I would have taken it. I had my finger on the trigger, but at the very end it didn't. But unfortunately, or fortunately, it moved up. So it would have been a good trade, but it didn't close above. So it wasn't a valid signal. So nothing here on Coke. Lockheed Martin, 42.02. So outside of the value zone again, you know, I may be looking down here, some kind of low RSI reading, but nothing on Lockheed. MasterCard, of course, we took the 10 EMA crossover here, hit a profit target there, hit one today, hasn't moved one ATR away from my entry, so no trailing stop initiated, but currently as long as the 10 stays above the 50 EMA, I will continue to hold it. If we do get one ATR away from my entry, then I will implement some kind of trailing stop. Altria, just taking off. Just taking off. I was so tempted to buy down here, but I didn't. Obviously wish I would have, but now it's a little overextended. I mean, now we're getting up to the third ATR channel. So, you know, in order to get interested in Altria, pull back into value. Philip Morris has earnings today, so that should have some kind of effect on Altria as well. Merck, just hanging out in the value zone. I'd have to have some kind of V1 or V2. Microsoft actually down today. We were outside of the 1 ATR channel, coming back into the 1 ATR channel. If we could move sideways for a couple days, get a valid V1, V2, that would be a good entry point. Netflix. So Netflix had earnings yesterday, and look at this, gapped up in the morning. You know, we were talking about the SPY, about people bidding it up in the after hours, bidding it up in the morning and selling into the open. Well, it's exactly what happened. Huge gain overnight on earnings, and opened up, went up a little bit, and then everybody sold. So this is not a very bullish chart or price bar. This is a reversal bar. We are higher than the open still by 2.89%, but we are currently less than the open. So we're higher than yesterday's close, but less than yesterday's open. And this is generally kind of a bearish reversal bar. If you're looking at this on candlestick charts, this would probably, instead of white or red, this would be colored as a black. So this doesn't look particularly bullish, even though it's up today. So nothing there. Nike is up again today, 69.74. I don't know if it rejected the 70 RSI. Probably came pretty close. Oh, yeah, pretty close. I think it did actually reject the 70. So Philip Morris, look at that. Holy smokes. Oh, I think Philip Morris had earnings this morning. That's right. Philip Morris has earnings in the morning. So anyway, no, can't do anything there, too high. How are we doing on time? PayPal. Looks like a 520 cross is getting close. I haven't, let me see how PayPal back tests on 520. Not good. Not good at all. So I don't want to take a 520 crossover. So at this point, it has moved back in the value zone. I look for a couple days pullback and then a V1, V2. Qs, of course, we already talked about that. We bought that with the 520 EMA crossover. That does backtest well, close to a profit target, but didn't get it. Be buying the SPY at the end of the day. That was a great overnight SPY trade. Bonds have really come back down. I would be looking for a deep dip buy here, right around this area, low 30s. See how it reacts around the 100 or move back up in the value zone, V1, V2. Tesla just keeps motoring up. Sorry about that pun. I didn't even think about it. But so anyway, too high for me here. Twitter, not acting very well. It's moving sideways. This means we are going to have eventually we're going to have some kind of big movement up or down. I just don't know which side. UNH, fantastic. I can't remember who has UNH. It was either Johnny or Murat that has UNH, but this has been absolute fantastic trade. Congratulations, you guys. 68.14 RSI, so getting close to that 70 RSI for what it's worth. Oil up again today, nothing there. VIX down a little bit still today. I'm looking at VIX in the 30 RSI range, but nothing today. Verizon up a little bit, even though it has a double top with the bearish divergence. Walmart also has a double top with a bearish divergence, but nothing there. Energy, no. Financials doing well. Real estate, big day today. Utilities had a V1 yesterday, but it happened underneath the 1 ATR channel. So in order for me to get interested at this point on utilities, I'd have to have it rally back a couple more days and then have a day or two downwards and then look for a V1, V2. And then healthcare has been really, really strong. So, gosh, guys, I really don't see anything I would buy today other than my S&P. You know, if I didn't have MasterCard and I didn't buy it yesterday, I'd buy Goldman Sachs today because the 520 happened yesterday. It's still valid. It's still above. It's down 51 cents from yesterday's close. So, you know, you get a 51% discount then from buying it yesterday because the 5 is still under the 20. So I still consider it a valid trade. And you have the MACD crossover, which is positive. But like I said, I have MasterCard already. It's in the financial space. So I'm going to be a good boy, set a good example, and I'm not going to buy it. A good example as far as I'm concerned, right? I mean, nothing wrong with buying Goldman Sachs with MasterCard for most approaches. I mean, you know, it's okay to have two different stocks in the same industry. I mean, even in my approach, it allows for it. But I just feel okay with MasterCard. I feel okay with what I have. So, you know, my main approach to trading, first and foremost, is preserving capital. That's my most goal. My second goal, obviously, is to make money. But my first goal is to protect what I have. So I'm fine. I'm fine with these two. But other than that, I don't see any other potential buys today other than Goldman Sachs. Except for the SPY, of course, have the SPY. All right. Okay, so I am going to buy the SPY at the market, and over here I am going to buy the SPY at the market. That was a nice overnight SPY trade. So yeah, I don't see anything I have to do today, which is nice. Come on, IWM, get up there. That'd be nice. MA's fine. Qs are fine. SPY buying at the end of the day. It'd be interesting to see whether Amazon's going to close over the 200 or not. What do we have? 5 minutes? Okay. Murat says, I think Apple was pushed by buyback. Maybe they stopped buying it. Yeah, it ran out of gas, didn't it? I mean, it ran out of gas. I mean, but it hit the 70 RSI, and that's right where it ran out of gas, which, just because it hits the 70 RSI doesn't mean it's going to immediately go down, but it could just move sideways, and that's exactly what's happened. So it's up 95 cents today still, which is good, but I would like to see a pullback on Apple for me to get interested. DXCM. Oh, Dexcom. I know this company. I don't really see anything on Dexcom here, honestly. We don't have a V1. We don't have a V2. Just basically kind of moving sideways. I'd look for a dip to the 200-day moving average max. That's what I would look for. I would look for a pullback to the 200. Be patient. LYV. Live Nation. Oh, this is one of those ones I can't see. Mount Doji. Look over on my. Let me look them over on my other chart. LYV. Yeah. LYV looks pretty good, actually. Let me see if I can drag this over. Oh, come on. Hope you guys can see this. I don't have an issue with this chart. But yeah, look, I mean, this is a nice V2. Here's day one. Yesterday washed out nicely. Today is closing above day one's close, over the moving averages, over a 50 RSI. I think it looks pretty good, Mount Doji. I think it looks pretty good. Yeah, it's a beautiful V2. Oh, Murat, you just sent the chart to me. I'm having a problem with my email today, Murat, for some reason. So if I don't respond, unless you sent it to me on Twitter. Oh, maybe you did. No, you didn't. So yeah, I'm having an issue with my email today, so I'm not able to get it right this second. Murat says, folks, don't watch it, participate, click thumbs up. Thanks, Murat, appreciate that. Yeah, hit thumbs up if you like this podcast. Anthony, hello all, made it. Smash those likes, 30 people watching. Anthony, only 8 likes. Well, yeah, if you guys haven't hit the like button, please do. I would appreciate it. So anyway, Anthony, that IWM trade turned out well today, and it is above your 200-day on your charts today as well. So that's positive, and so you know what you need to do from there. You just manage it on your 200-day. What do we have? We have 1 minute left. All right, so I'm going to be buying the SPY at the end of the day, and that is it. All right, that's the market, everybody. Let's see where I got filled on. All right, so SPY 299.70. Oh, I'm sorry. 299. That's where I sold it. 299.28 is my new overnight SPY trade. $299.28. So that is my new entry for tomorrow. And that's it. So IWM almost hit that second profit target, hit the first one today. So that's good, takes care of that. MasterCard, really glad I hit that one up there. Q's got close, but no cigar, and then SPY rebought that. So that's it. So pretty light on the positions right now, but that's fine. You know, I've had a good month so far. Pretty steady as she goes, so I'm grateful for that. All right. So listen, if you guys have any other questions, any comments, anything you want me to look at, please let me know. I'm happy to take a look and clarify. But before I do, I just want to put in my quick plug that I do each day. Hope it's okay. But I do want to let everybody know that I do offer private one-on-one teaching, coaching, and mentoring lessons in the evening time via Skype. I've had really good success with my clients. I do have a 10-hour course. It's 5 2-hour live one-on-one Skype sessions with me. I teach you everything that I know, and usually at the, about half to three quarters of the time I'm teaching you, and then after I get done teaching you, I have you teach it back to me, which sounds easier than it is, because when I'm doing this going along, it's probably pretty easy to follow along, but when I turn the tables back on you and you have to teach it back to me, then I really know if you know it or not. And if you don't know it, I keep teaching until you know it. So it's really interactive. I put a lot of energy and time into these live lessons, and I only like to do one-on-one. I don't like to, divide it out between other people. I just need it to be, mano a mano, one-on-one. And I've had really good success with my clients, and it's very important that my clients succeed. So I do take a real personal interest in doing my best to teach. And you always hear you have to have a plan, you have to get a plan together and trade. Well, what I have found is people focus mainly on the entries, maybe some exits, but really to have a whole plan, you need money management, you need to think about correlations, profit targets, all this other kind of stuff. And so, if you do become a student, take the one-on-one lessons with me, I will, put together an entire complete plan for you to follow. So if it's of interesting to you, please, my email is in the description of this video. You can email me. Hopefully my email will be up and working later today, because it's not, or alternatively, you can send me a message on Twitter as well. And if you have an interest, doesn't mean you have to take the course, but if you have an interest, I do like to have a little bit of an interview. I do like to get a one-on-one Skype call with that person just to kind of kick the tires, see if they're interested in me, if I'm interested in them. But it's 30-40 minutes, and I just want to know a little bit more about you and your trading, what your challenges have been, what your goals are, and then I'll put together a lesson plan to hopefully help you achieve those goals and to overcome those obstacles that you've been dealing with. So anyway, if you're interested, please let me know. Like I said, price is in there in the description of this video, email, or you can Twitter me. And then lastly, if you like this channel, this live stream, I would appreciate it if you would hit the thumbs up button. It does help get the podcast out to more people. There's a lot of people that really truly need help trading. They don't need a lot of hyperbole and a lot of like, hey, let's get rich quick. They need some good, solid, real trading principles taught to them. And I think if you come to this channel, you will get that. So you can help me out by hitting the thumbs up button and hopefully getting more people here. And if you could share it on social media, that would be awesome as well. So okay, that's it. That's my plug, and let's take a look at some other comments. Okay, Murat sent me the photo. Now what's this photo again, Murat? Jesse says, let's take a look here. Jesse says, looking at KO again, V2, it gapped open but almost filled the middle of the value zone. As long as it closed over 50 RSI, several MAs crossed under the 50 though. Thoughts? Yeah, let's look. Let's take a look. Yes, it is a V2. It did have a gap. You know, it did fill part of the gap, but is this enough? Let's see. So the unfilled gap portion was about 9 cents. If you put that in the value zone, that I guess it's like, it's not quite a quarter. So yeah, I guess that would be valid there, Jesse. Although I don't like that it rejected. I don't like that it rejected the 50-day moving average at all, and I don't like that it rejected the 50 RSI, because earlier it was above 50. Now it's a 49.58. So yeah, I wouldn't take this trade just because, you know, if I had been in it yesterday for whatever reason, I would have gotten out today because it rejected the 50 RSI and it rejected the 50-day moving average. So no, I would not want to take that trade based upon the close, Jess. Oh, it's Zynga. No, the chart you sent me, I see a different chart here. Looks like a nice chart, but I'm not sure what it is. But yes, your Zynga is marching. It's in a stealth, nice up move about every day, so fantastic. Oh, the chart is hourly. Okay. So the chart you sent me, I can't see it very well. Short at 1 and quit 2 because of the sudden drop. This doesn't look like Zynga. Got long at 56.16. So what's that one, Murat? The one that you sent me. Because Zynga is a $6 stock. But yes, that's going well. Frank says, I believe learning stock fundamentals can only help in technical trading. Yeah, I agree. I mean, you know, the old saying, Frank, is, you know, fundamentals teach you what to buy and technicals teach you when to buy. So yes, I 100% agree. Having the best fundamentals of the stocks in your watch list, I think, is very important, because fundamentally the companies are strong, but even if they're strong, sometimes there's no signals. And then if you get a technical signal, you know, then you have a strong company and you're buying a technical signal. So I think it's the best of both worlds. Oh, spot Brent crude oil. These trades in one, 3 trades in one picture. First long, second short, and now long. I am in the third now. All right. Well, that is definitely the place to be in to be long lately. Fantastic. You know, it had that nice consolidation there, and then it's moved up 1, 2, 3, 4, almost 5 days in a row. So great analysis, Murat. You do some good analysis. I like your charting, all your trend lines, all your stuff, resistance levels, support. Yeah, you do a fantastic job. You do a fantastic job, my friend. You're welcome, Jess. Max says, I don't know if you are a trade on short time frame fundamental only distracts you. I don't know if you are trade on short time frame fundamentals only distract you. Well, yeah, I mean, look, you can make the case for both, but I think I feel pretty confident to say that if you have a watch list with stocks, good leading stocks with good fundamentals, and you focus on the long side, I would much rather take a good dip below the 200 and back over the 200 on Apple than I would on J.C. Penney. You know what I mean? So, but that's kind of a long-standing debate. I think you can kind of drive yourself crazy, but I try to simplify trading as much as I can. I just like to have good stocks on my watch list, good strong stocks on my watch list that have good fundamentals, and then just don't take the trades until I get a signal. All right, so here is Murrett's oil trade that we were just talking about. Oh, now I can see it better. So looks like it was 3 trades. He was long, short, and then long in this area. Pretty good, huh? Pretty good. Nailed that short. Nailed this long. Yeah, you're a really good trader, Murrett. Thank you for your contributions and sharing this. Max says you get bias from positive fundamental catalysts with price action goes opposite and you lose what you paid on price. Yeah, I agree, Max, for sure. I think it's more relevant is if you're a buy and holder and you feel like the fundamentals are good and it starts going against you. I think that's really where people get into problems. They're like, but the fundamentals are good. The fundamentals look good. The fundamentals are good, even though the price is going down. And because they don't trade technically, they just rely solely on the fundamentals, right? But if you have something with good fundamentals and you have a good entry point, but it goes against you, then you just get out, right, for a small loss. But yeah, it's a tough one. A lot of people debate this, and I don't think anybody's particularly right. I think maybe for each individual person there is a right answer, but I don't know if there's a right answer for everyone. So LVY is a V2. It is a V2. You can see we had this gap, and my students know that you don't buy a gap, but it gapped and then it filled and then it took off, which is fine. So yes, it's a beautiful V2. MACD is positive. We're over 50 RSI. We're over the 5 and the 10 and the 20 and the 100. The only concern really right now at this point would be the downward sloping 50-day moving average in this previous high. But did you take this, Mount Doji? Max, you are right. I was in the thick of WorldCom and Enron personally. I had WorldCom and Enron. I don't know if you know that. I don't know if that's why you put those words in there, or they're just so famous that everybody knows about them. But yes, so I had both of those stocks. I lost a ton of money because I thought the fundamentals were good, and I wasn't a technical trader at that point. So you're 100% right. All right, you did not take Live Nation. Well, the thing is, Jesse, with the fundamentals were good in Enron and WorldCom, but they were fraudulent. The numbers that they were putting out and the assets looked really good, and that's what suckered people like me into thinking, gosh, fundamentally it makes sense. But it was a fraud, Jesse. It was fraud with the numbers. Murat says, I was a pure fundamentalist. I used to buy stocks without looking at charts almost, and it was a big mistake. Fundamentals have one big problem. They are not risk aware. Yeah, I agree. Almost every story I heard about person losing money through pray and hold is because they justify it with fundamentals. I 100% agree. I don't do it. I go off of off of technicals 100%. But I'm just saying that having fundamentals as well as technicals is not such a bad thing. All right, JT, your thoughts on CL? It has earnings. Okay, let's take a look. It has earnings when? On October 25th. Well, it did bounce off the 250. It never went under 30, back over 30. Yesterday, it may have gone under 30. It may have gone under 30. It probably did go under 30 and then close back above. Close under the third ATR channel. Yeah, I mean, I would have taken that trade yesterday with the half position because it's under the 200-day moving average. But yes, I mean, we're down here, third ATR channel, under 30, back over 30. So 33.47 RSI. Is it in a downtrend? Yeah, 100%. Is it scary? 100% it's scary to buy here, but it's a pure risk to reward. I mean, my risk is from 33.47 down to 30, and my reward is possibly up to 50. And deep dip, we did buy off the 250. So I wouldn't buy it today. I would have bought it yesterday. And get out before earnings. Murat, the chart, not the price, has a lot of footprints of fundamentals and how people are perceiving it. Yes. Frank said fraud is a horse of a different color. Yep. Well, there was fraud involved in that, but unfortunately, I didn't know it was fraud. And I looked at the balance sheet, and I looked at everything and said, yeah, this shouldn't be here. It's going up. Yeah. Should have just gone with the technicals because the technicals don't lie. Murat says, I look at the chart. Fundamentals, the chart's good. All right. Mount Doji says, did you already talk about XLU? I went through it real quick. I mean, there was a V1 yesterday, but it was underneath the 1 ATR channel, not back into the value zone. I would expect this kind of buy to get sold into. I would, again, whenever we come from under the value zone back in the value zone, I'd like to see it come up for a couple days. The people that were lucky enough to buy here, once it starts slowing down, they're very likely going to sell. That will cause it to come back down. If we get some new buyers in here, then I could get a V1, V2 back in the value zone. The people that bought here and sold in that down move were gone. So there's a lot of those sellers are out of the equation. So that's what I would wait for, but I wouldn't buy this. Bing He says, hey, Bing He, how you doing? I was monitoring CL just now as well, but the signal is gone now, so I did not take the trade. Yeah, I think I would have had to have taken it yesterday. JT, not in CL, just 5 minutes ago. All right. Let's take a look here. If we had any interesting work and interesting earnings after the bell, I don't see any. Okay. All right. Well, listen, nice profitable day today. That's for sure. Happy for that. And if we have an update tomorrow, I think I make a new high for the year. I think. I'm not saying, I'm just saying if it does go up, right? But yeah, we've had a good run. It's been a good week. It's been a good month. Take a look here. All right. So anyway, last chance for questions. If anybody has any, please let me know. There's Murrett's chart. Very, very nice. MACD positive, moving up. Probably had some kind of crossover here. Thanks for sharing that, Murrett. All right, everybody. Well, listen. Oh, Bing He says, quite a number of bonds came out in my scanning. I'm not sure if it's signaling anything tomorrow. JT says, I use Stock Fetcher site to scan for stocks and create my scripts. Oh, great. Jesse says, have a great day, everybody. I look forward to this every day, chatting with Greg and everyone. Thank you, Jesse. I look forward to it as well. Frank says, celebrate those new highs. I know. Let's look at bonds. Bing He wanted to look at bonds. So I mean, yeah, I mean, obviously we're in a dip here, right? But I don't see any really support levels here yet. You know, the first support level I would look at is maybe the third ATR channel. The second support I would look would be the 100-day moving average or the 30 RSI. I mean, tomorrow the 30 RSI on bonds would be it's way down here. Yeah, I mean, like over in this range, so you know, that's a big ask to get down that far. But I don't see anything, you know. I mean, if we move sideways here, created a little bit of some support, and then we had one day that spiked down, reversed back up with the V1, V2, back up into the old range. So it was a false breakout, also a false breakout to the downside, reversal. You know, nice V1 up against the bar that wasn't large for 1 ATR, or rejection of the 1 ATR, the third ATR channel. That's where I would be interested. Or the same thing here at the 100. So I think it's a little early. So JT, thank you, my friend. Always an honor and a pleasure to have you here. It's an honor to have all you guys here. I mean, it really is. I mean, I really appreciate you spending your time. I really hope it's helping. And Murrett, thank you, my friend. Nice to have you here, and thanks for sharing all that information. You're a great trader. Really, you are. The more information you share with me, the more impressed I am. And Frank, good seeing you, sir. Thank you for your comments and for coming by. Jesse, thanks, buddy. And you know, if you have any questions, we're done with the lessons. If you have any questions, you just let me know, all right? If we need any brush ups. Bing He, thank you, sir, for coming from Singapore. And yeah, that's my take on bonds right now. And Mount Doji, excellent trade on that first symbol from yesterday. That was really great. Congratulations. And good seeing you. And let's see, Max B, thank you, sir. And thanks for your comments and your input on the fundamentals versus the technicals. That's always an interesting subject. Let's see. Did I miss anybody? And Steve Burns, of course. Thank you, my friend. And great trading. And thank you for everything you do. It's great to see you. Anthony, wonderful to have you here. Good catching up with you yesterday on the phone. And you know what to do now with your Russell 2000 trade based upon your settings. And I think I got everybody except for, and Kurt and John. So thanks, Kurt. Appreciate it, bud. And good lesson last night. You did really well. And you just stay in touch, okay? You stay in touch. I want to help you as much as you can. And also, Jackson, thank you, sir. Appreciate you coming by. And yeah, I look forward to starting our lessons. So you just let me know. All right. So I think I mentioned everybody. If I forgot somebody, I apologize. And Marco, haha. Oh, from Slovenia. You know what, Marco? I was out hiking the other day and I ran into a guy from Slovenia up in the mountains. He was just here visiting. How ironic is that? Yep. So I didn't know you were from Slovenia. Or maybe I did and I forgot. I can't remember. So, all right, guys. Well, that's it. Listen, have a good rest of your day. I hope your trading's going well, and go out and do something nice for somebody today, right? The world needs more of this. Just a little something, a wave, a smile, a hold the door open, just something. We need it. We need it. So have a great rest of your day. Be safe, and hopefully we'll see you tomorrow during the last hour of the market. Take care, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.